Assalamualaikum and a very good afternoon, everyone. And welcome to the BGS International Founders Week 2021. And today it will be from BGS UM Chapter Malaysia. We are, I am very delighted to have all of you here. And I am Aida Fatimi, your moderator for today. So today we'll be having a very special guest, which is Mrs. Maya Marisa Malik, who is currently the Chief Executive Officer slash Managing Director of Amani Advisors Limited Dubai, also the Executive Director of the Global Sharia Advisory and Compliance Amani Group. So how are you, Mrs. Maya?
I'm well, thank you. How are you, Miss Moderator?
Yeah, I'm fine too. All right, so in this webinar, we'll be having a short presentation by Mrs. Maya Marisa Malik and follow up by a Q&A session at the end of the webinar. So we have gathered some questions prior to this webinar. However, the audience, you can also put your questions in the chat box below. We will try our best to answer as many questions as possible in this 40 minutes. So now I'll pass the floor to Mrs. Maya Marisa Malik.
Thank you, Aida, Miss Moderator, and thank you to the organizers for a very smooth organization of this forum and for inviting me to share some thoughts. So, Assalamualaikum warahmatullahi wabarakatuh, and good day to everyone. Thanks for joining us. Okay, so the topic that I'm about to share is very much a compressed version of what is Islamic finance in a nutshell, and I'll also touch a bit about how Islamic finance is faring during this pandemic. And also maybe some food for thoughts about what are the opportunities that we can glean out of this crisis. So I think first is, as you can see on the slide, what is Islamic finance? So basically, Islamic finance is the same as conventional finance in that it is a financial mediation or a financial intermediation, but according to a very specific set of rules known as Sharia. So Sharia is an Arabic word. It refers to divine law, and the rules of Sharia comes from two sources. One is from the primary sources, which is the holy book, as well as the traditions of the Prophet Muhammad SAW, and also the secondary sources coming from various consensus through maslahah or public safety through discussions and ijtihad between scholars and whatnot. So in terms of what Islamic finance seeks to achieve, it's the same as conventional finance. So it seeks to achieve the same economic objectives. It gives financing to those in need. It taps the capital market to get additional capital. It invests in businesses in different sectors, for a profit. So in order to get returns. So the economic objectives between Islamic finance and conventional finance are the same, and it's just how Islamic finance go about doing it or go about achieving these economic objectives is different. So it has to go through the Sharia law. It has to, tap the primary sources and secondary sources of rules in order for a particular transaction to be Sharia compliant. So next slide. So these are the salient features of Islamic finance. It's interest-free. I think everybody knows this. There cannot be any element of interest, either, it's express or implied interest element in any Islamic finance transactions. Avoidance of uncertainty, meaning all Islamic transactions, structures, the terms and conditions must be transparent. And this is something I think is the same as conventional finance. So legal agreements, the legal documents must be transparent, must be clear. Avoidance of gambling elements. So this is under the no under Islamic finance. So, and I would say many, most of the conventional finance instruments as well are avoiding any gambling elements. The need for underlying assets. So this is very important, the need for underlying assets, because Islamic financial contracts involve either an exchange contract or an investment-based or partnership-based contract. So there must be underlying assets, be it something tangible or intangible, or in the form of projects, in the form of intangible assets can refer to maybe airtime, the right to travel, for instance, that airlines have. So this form the requirement to meet the requirement of the need for underlying assets, and this is also related to pricing of assets. So there is a rule in the market about pricing of assets. So I cannot sell a pen for $1 million. So there is a pricing rule, yeah, to make it more real. And also this requirement for the need for underlying assets is what had cushioned the blow during the global financial crisis back in 2007, 2008, where you had the subprime assets blowing up, went out of proportion. So next is the avoidance of prohibited goods and services. So at the moment, many conventional products, many conventional transactions avoid the same goods and services that are prohibited under Sharia. So if you look at the bigger funds, or even if you look at the indices, Morgan's MSCI, FTSE, Dow Jones indices, they exclude what they call sin stocks or vice stocks. So you won't find, many prohibited or most of the prohibited goods and services in the Sharia, with the exception of conventional financial services. So conventional financial services are still the one thing that, that is a glaring difference between conventional finance and Islamic finance. And then profit and loss sharing or risk sharing. So this is another important feature of Islamic finance, regardless of the type of Sharia contracts that are being used for particular transactions. So there must be element of risk and benefit, as well as or profit and loss sharing, depending on the type of contracts used. And then compliance with Sharia principles. I think this is self-explanatory. All transactions, in order for it to be Sharia compliant, need to comply with the principles of Sharia. And compliance with the principles of Sharia exists hand in hand with compliance with the law of the land or other aspects in order to make a particular product or transaction not just Sharia compliant, but also commercially viable and legally enforceable in a particular jurisdiction. And Sharia governance is next. So Sharia governance refers to the monitoring, the Sharia oversight. So not just at the onset of a particular transaction, but also throughout the lifetime of that investment or particular transaction. So this is where you have Sharia scholars, Sharia advisors coming in, Sharia audit being conducted. So in the market, the International Sharia Standard Setting Body, which is called the Accounting and Auditing Organization for Islamic Financial Institutions, or AUFI for short, have issued the Sharia governance standards, and then now they are in the process of issuing more governance standards for particular product, like Sukuk governance standards and so on and so forth. And next is social responsibility. So there are Sharia contracts, mostly unilateral Sharia contracts that are catered for, to discharge social responsibilities, which I will, expound and elaborate further later on. But this is in order to have a positive impact on the society. Next slide. So how is Islamic finance faring during this pandemic? So the IMF describes the COVID-19 crisis as a crisis like no other. I think most of us would agree with this. We have not experienced this type of crisis. Usually we are facing financial crisis, but this time around, I think earlier on, it was more consumption crisis. We have money, we cannot go out of our houses to consume, to buy, to purchase. We cannot exercise our purchasing power, and then obviously, follow on from that, we have so many other crises due to the pandemic. The performance, the GDP, the IMF expects that the 2021 GDP to be about 6.5% lower than the pre-COVID-19 projections of January 2020. So that's a high number. And most of the impact will be on low-income households, and this will dampen the significant progress made in reducing extreme poverty in the world since the 1990s. So, there has been a lot of work being done by many countries to reduce poverty. Now, we have to double up our efforts in this space. And this is an impact that is not just seen in certain countries or certain jurisdictions, but this is a whole, it's a global impact. Everywhere is experiencing this. And of course, through the crisis, there are many challenges, liquidity challenges, the resilience of capital, especially for Islamic banking sector, which is the largest component of the Islamic finance industry. So the banks are the first, I would say, the first frontier for the retail sector, for consumers, for the society. And now, they are having liquidity challenges, as well as having difficulty in raising capital due to withdrawal of deposits by governments, by corporates, etc. So much so that the Islamic finance industry has slowed down significantly in 2020 after experiencing a strong trajectory growth in 2019. So it was going like that, and now it has abruptly slowed down, and slowed down as well as reduced in terms of the growth. And there's no change. So according to the Global Islamic Economy report, Islamic finance assets stood at the same amount, more or less the same figure in at the end of 2020 as compared to 2019. So, it's very much stagnant. Investments took a big hit. It fell by 13% compared to 2019. And again, sadly, this affected, most of the SMEs and those who are in the, low income minimum wage category. Next slide. So we need a new paradigm in order for us to respond to this crisis, and probably there will be other crises in the future. So the principles of Islamic finance may help the economy to both avoid endogenous generated crisis, as well as provide a safety net against exogenously induced cycles like what we are facing right now, the COVID-19 crisis. So Islamic banks have been hard hit as similar to its conventional counterparts. Reason being they are operating based on the same models. And having said that, Sharia compliant equities, we can see from the performance of especially equity funds, tracking the performance of Islamic indices, these perform better than the conventional indices and the conventional equity funds. Islamic social finance instruments such as wakaf, sadaqah, zakat, takaful, provides a safety net in curbing the repercussions of the crisis. So it contains the crisis, it can make it less severe. And it's a good thing as well that, over the past few years, fintech have dominated most of the financial industry news, regardless of whether it's in the conventional space or the Islamic space. But through fintech, there have been an increase in relation to financial inclusions. The artificial intelligence and big data led infrastructure has helped to make distribution of information, deployment of funds more effective, especially so I think in the midst of the pandemic where you can't fly and have meetings, so you use technology to actually make everything smoother. So next slide. So from the global financial crisis, which happened in 2008, 2007, so there have been studies made, and there have been, and some of the findings state that Islamic finance is more resilient in times of crisis as opposed to conventional finance due to the salient features of Islamic finance. For instance, the need for underlying assets, a more risk sharing, profit and loss sharing approach, the requirements for more transparency and clarity in terms of the legal documents, avoidance of certain sectors that can make a particular investment more susceptible to or more volatile in crisis times. So those studies have looked at these features of Islamic finance and have theorized that Islamic finance is more resilient compared to conventional finance. So the two lines of defense, the two main lines of defense for Islamic finance against crisis is the tight integration between a particular structure transaction with the real economic activities, and risk sharing of certain particular products against endogenous risk. So it's not, so in that sense, it makes Islamic finance more sustainable. And the second line of defense, a strong safety net against exogenous risk, reduces or may reduce recession period, and also lessen the severity of the recession. Yeah. So next slide. Okay, in terms of sectoral view, so as I mentioned earlier, Islamic finance had a very high trajectory growth over the last decade, and certain jurisdictions experienced this more than others. The onset of the pandemic paired with oil crisis, I think the recent oil crisis created dual shock, especially for certain countries. So I'm based in the Middle East, where oil is the main contributor to countries, Middle Eastern countries' GDP. So the pandemic and the oil crisis really did impact the Middle Eastern countries, and has increased risk in terms of asset quality and profitability, as well as increase in default rate. So liquidity is constrained. We see central banks trying to help by reducing the reserve requirements as well as reducing the regulatory buffer to help stimulate some form of consumption, some form of trying to resuscitate the market in terms of economic activities. We also see difficulty in raising capital from capital markets due to the uncertainty. Basically, there's a lot of projects being put on hold until people are more certain. Profitability is lower, higher non-performing NPL or NPF basically. So that was in relation to the Islamic banking sector, which is the biggest sector in the Islamic finance industry. And then next, the second most significant component of the Islamic sector is the Islamic capital market. I mentioned just now, freezing of new sukuk issuances or reduced sukuk issuances due to uncertainty and ability of existing issuers to service outstanding debt is reduced. So there's a higher risk of default. So next, in relation to the Islamic equity market, on the other hand, I think earlier on I mentioned Islamic indices is seen as generally outperforming their conventional counterparts. So information, IT, tech, IT, healthcare, which is included in many of the Islamic indices, outperformed other sectors, such as financials, which is not compliant because it's interest-based transaction and hence not included in Islamic indices. So because of the requirement to exclude prohibited sectors such as financials from the Islamic indices, this in one way made the performance of Islamic indices better than the conventional indices. So safety nets and Islamic social finance. So this is another aspect of Islamic finance that is increasing in its in initiatives, I would say. Malaysia is leading the way. Malaysia has issued, the SRI framework. The Securities Commission has issued the SRI framework. Bank Negara has issued the value-based intermediary framework for banks to follow. So, and also I think there's an increased use by many big humanitarian agencies. So they have recognized that there are aspects of Islamic social finance that can be used in their effort to curb crisis, to help the poor, etc. So UNHCR, for instance, the Red Cross or Red Crescent Federation, Mercy, the WHO. So they have actually used Islamic social finance tools in their efforts to manage crisis. And they recognize that, I mean, the Islamic social finance have two important roles: containment of any crisis, and also recovery. That means helping people to get back on their feet, helping economies, helping parties to actually rise above or recover from any crisis. And I think moving forward, there have been initiatives in the market to actually integrate and consolidate Islamic social finance instruments together with either conventional finance or government policies, so that we have like a blended approach of raising funds from the market or funding important developmental projects using both Islamic social finance instruments as well as conventional finance instruments. And also with the introduction of Islamic fintech, this has boosted the mainstreaming of Islamic social finance instruments. So I think you've seen crowdfunding, you've seen peer-to-peer funding, you've seen I was looking at one approach, I think it's called it uses sukuk, but in a platform that is similar to crowdfunding. So this is this is possible with the use of fintech actually. So next. So in conclusion, next slide. The principles of Islamic finance can help the economy to avoid, external generated crisis, and also provide strong safety nets against internally induced cycles like the pandemic. And Islamic finance principles can help push the economy out of a debt trap, which will require alternative methods and alternative type of contracts. In certain sectors, equity Islamic assets perform better. We've discussed that just now. And there is also the need to look beyond lending. So when I talk about beyond lending, this refers to more partnership-based arrangements through venture capital investments, startup investments, micro equity financing, where both financier and the entrepreneur would share the risk. Instruments of Islamic social finance, I think this is an opportunity to further enhance the role of Islamic social finance instruments, especially wakaf, as well as sadaqah, to be blended with other forms of instruments or other forms of financial instruments or investment instruments to further have or increase positive impact. And also I think we cannot look back now. So fintech is something that we need in the future, or we need now currently. So I think this is something that's going to continue to grow. So basically there are opportunities, there are lessons to be learned, I think, even for Islamic financial industry players, to further enhance the products and services, to reinvent certain wheels. I would say from the lessons learned from this crisis, to actually create a new paradigm and new way of doing business that's going to be more sustainable and more resilient, regardless of the crisis that's going to happen in the future. So thank you. Over to you, Miss Moderator.
Yeah, thank you, Mrs. Maya. So I really like how the emphasis on the Islamic resilience and other knowledge that somehow indirectly or directly answered the prior questions that most of the students have. So I think we'll move on to the Q&A session right now. So we will try to answer the prior questions that perhaps that you haven't answered during the presentation just now, and also a new questions from the floor. So let's see the first question. So what is the best measure to ensure Sharia Supervisory Board independence at the bank level from the influence of the CEO on the conventional bank offering Islamic windows? This is quite a different angle, perhaps because this one is from the lecturer. So yeah, can we have your view, Mrs. Maya?
Yeah, I think maybe firstly we can also see whether the independence of the Sharia Supervisory Board has been affected or has been influenced. So is there any any cases where this has been the case, where there is influence of the CEO or the board of directors in relation to the discharge of duties by the Sharia Supervisory Board? I think in Malaysia, basically, because the Islamic window model is slightly different from the Middle East or other parts of the world, where the window is actually in other parts of the world, the window is actually a division within one bank, within just one bank. In Malaysia, the window is actually separately licensed, so it's like a subsidiary format where it has its own legal entity, it has its own governance documents and management and board. So I think one is the Sharia governance document will need to be very transparent and robust enough to allow Sharia supervisory boards independence from the executive function of, or the other executive function of the bank. And also I think in Malaysia, there has been an initiative, a new initiative where the central bank or Bank Negara has required the Sharia board to be more exposed to the business side of the bank. So, so in one way, in relation to carrying out or discharging their responsibilities, I think we are looking at many Sharia resolutions being issued by central banks or the authorities or standard setting bodies. So the rule of law in relation to Sharia standards are more or less, I think, transparent and stable now as compared to probably 10-15 years ago. And in relation to giving better opinions, have better understanding, I think the effort of the Central Bank of Malaysia is very much applauded, because the central bank requires the Sharia board member to actually understand the business aspects. So they are on the same team, working towards the same objectives rather than on separate on separate sites. So I think the best measure I would say is actually in relation to the Sharia governance framework, in relation to the availability and transparency and robustness of the Sharia standards and Sharia resolutions right now, I think. So there's not much grey area to allow undue influence from third parties in order for the Sharia Supervisory Board to discharge its duties properly.
All right, thank you, Mrs. Maya. So we have a question from the floor. It's actually from Kayla. She's actually among the BGS Global. So we have, she's from United States. So a question is that I learned in my university that credit is not used in business transaction. Is cash typically available? Have currency printing ever halted?
Okay, so I'm assuming that credit in the context of Islamic finance is not used in business transactions, right? Because credit is used in, I think this question I'm going to put it in context, or in the context of Islamic finance. Well, actually, there is credit in Islamic finance transaction, especially banking product. I mean, all Islamic finance transactions using exchange contracts. So credit is there. It's just that how this credit is established is different from how credit is established in the conventional sense. So in the conventional sense, you lend a principal and you will get back, your principal plus interest after a certain period of time. So in Islamic finance, this is achieved through an exchange contract. So I sell something to you at this price. So this is the cost price, and you have to pay me back for this purchase at cost plus markup on deferred terms. So that is credit in a way. It's just that it is established, the indebtedness is established in a different manner. So yes, I think that answers the second part of the question as well. So obviously cash is available as well. Have currency printing ever halted? I think Sharia is neutral on this because the Islamic banking works similarly. It's just that how they came about establishing credit or indebtedness is different.
All right. Thank you, Mrs. Maya. So we have another question from the floor. It's actually from Rubini. What are the current challenges of Islamic finance? I think perhaps like why can't it be implemented like conventional in a very large area? Why can't we go Islamic finance? Because we already know how this is resilient and much has shown the proof that Islamic finance can withstand the crisis, but why can't it be implemented in the bigger
Scalability.
Scalability.
Okay, scalability. Well, I think maybe I can give one main challenge. So Islamic finance is operating within a framework, a conventional finance framework in many countries. So there are aspects of Islamic finance that are difficult to implement because of the ecosystem is not that conducive. So I can give an example. Many countries, the governing law of many countries are using civil law instead of common law. So in Islamic finance, ownership is important because then you establish risk, you establish your benefits or your returns from a particular project or asset where you own. So ownership is important. And in civil law countries, transfer of ownership has to be through perfection of legal title. So when you transfer ownership through perfection of legal title, there is a tax imposed on transfer of ownership, right? In most countries. So in common law countries, there is the concept of trust or trust law, for instance. So any sukuk products or banking product for like Injarah, for instance, under the common law, beneficial ownership can be transferred, and this is good enough from Sharia point of view. So there is no tax imposed on transfer of beneficial ownership in most countries. So Islamic financial products and conventional financial products can be on a level playing field. But if the ecosystem is not conducive for Islamic financial products, it will not be on a level playing field. So it's very difficult for Islamic financial products to compete with conventional financial products because it's going to be cheap. Conventional financial products is going to be cheaper and whatnot. So I think one main challenge is in some jurisdictions, the ecosystem or the legal framework is not yet conducive for Islamic finance. So that makes it very difficult for Islamic finance to be implemented globally.
Yeah, thank you, Mrs. Maya. So we have one last question from Samir. He's from the BGS Global, currently in Texas. So what is the biggest misconception people have about Islamic finance?
Okay, I like this question because I always get this.
Yeah.
So for me, because I'm covering the global market in my job, so I'm advising the global market. So the biggest misconception people have about Islamic finance is that it's only for Muslims. So that's the first thing that comes to mind, as Islamic finance is just for Muslims. So it's not just for Muslims, it's for everyone. Hence, comes the other misconception about Islamic finance, that is very challenging, it's very difficult, too difficult to implement and very difficult to understand. So that is the other misconception, because it's not because it's difficult, but because it's a new way of doing things. So if you look at more mature market, I think most of the, like Malaysia, for instance, there are increased number of non-Muslims that are opting for Islamic financial products, because sometimes it makes sense that, okay, you have to have an underlying asset. I must be clear what I owe bank, how much I owe the bank and whatnot. So I think in time, some of these misconceptions about Islamic finance will be reduced, but obviously I think this type of engagement, with students, with the public, is important.
All right, Miss Maya. So could you perhaps answer one last question, or perhaps that we could end this webinar as planned? Yeah. What's your view? One last, or we could end it? Yeah.
Up to you, Miss Moderator.
Okay, I think we could have one last questions. I think can I have the technical team to go to the forex questions? All right. So the rulings on forex are debatable these days. What is your view on this?
Okay. Okay. AUFI has one standard. I think is quite early on. One of the earlier Sharia standards called Buy or Sarf, which governs exchange of currency. So I think the thing is, we have to make sure that these rulings that govern the exchange of currency to be fully complied with. So there are, currency is, it has to be spot, hand to hand, right? It has to be a spot transaction, but obviously I think more sophisticated definitions of spot, if you see in the market, is T+2. So that is the technical definition that are being used in the market nowadays. So spot forex transactions are quite clear. It's okay. It's Sharia compliant. And then I think we have to also study the rules of Buy or Sarf under the AUFI standard, which is quite which is very clear. Secondly is, I think the other issue that may arise from this question is in relation to gold. So gold in Sharia can also be considered, gold and silver can also be considered as currency. So I've been involved. I was involved in the development of the Sharia standards on gold, together with the World Gold Council and AUFI. So we developed the standard, and the gold standard has a stricter requirement as compared to hard currency. So stricter in the sense that spot doesn't mean T+2, but spot means spot, immediate exchange of cash and the gold. So in hard currency, it can take, I can enter into a contract with you now, and then we can settle 2 days after, so T+2. But for gold, it has gold and cash, so it has to be immediate in terms of the exchange. So the standards are there in the market. So when we look at any particular forex product or forex transaction, I think we have to know what are the requirements from Sharia perspective, and if this product meet that requirement, then inshallah it's Sharia compliant. I'm not going to talk about the cryptocurrencies or crypto commodities. So that's another new new development in the market, and ourselves and our Sharia scholars are very much looking into this as well. But if it's considered as currency, let's say if it's considered as currency, then the same ruling will apply. Buy as sarf will apply. If it's commodity, the same rulings of commodity will apply. So we have to look at the features and the behavior to see it falls under which category, and then we will know what rules to apply.
Okay, understood. So thank you, Mrs. Maya, for your time. And also thank you everyone for your support. And we hope that those questions that prior questions we have indirectly being answered throughout the presentation. So before we end, we will have a QR code scan. But Mrs. Maya, you may thank you so much for spending your time. Although it's past the time that we have agreed upon, but thank you so much for the extra one question to be answered.
Okay, thank you, Fatini, and thank you to the team, the organizing team, and the participants who joined. Have a good day.
Thank you, Ms. Maya.